Hi, I'm Milton Rendell and welcome to Real News Friday. Another big week in terms of sales. They've cracked the 1,000 mark with 1,042 sales, up a whopping 19%. Big figure, and certainly a figure that sort of guides us going forward in knowing that probably in the next 3 to 4 months we're going to see a fair bit of activity. The house sales were actually up 21%. The number of house sales was 765. Units or stratas were 182 and land sales were 95. So interesting shift away from the land and into established houses. So now the interesting part now becomes our stock levels, and I've always talked about that magical figure of 10,000. We're down to 10,108. Now that's at the point that it starts becoming very, very competitive for the buyers out there. So, and for the sellers, this is certainly a number which is attractive to you in the fact that we're seeing pressure to pricing now, and I would believe leading into early 2021 and now going forward that we definitely have pressure to pricing. So I think we will see a steady increase in pricing in the first half of next year. Second half, probably too far to forecast at this particular stage, but I think 2021 overall will see steady growth, and I think that's the forecast for nearly the whole of Australia, which is an interesting one considering the many people were doom and gloom not long ago saying it was going to drop by 10, 15 and 20%. Then now changed their tune and now saying there's going to be capital growth. So, which is a good thing. This is going to enable people to be able to come back to the market who previously couldn't sell. And like I say, the inquiry has been very strong and the buyer activity has been quite strong. Now, an interesting one on the rentals point of view. Now, the amount of rental stock available has gone up 3%. So that's an indication that obviously people are buying in preference to renting. That could be part of it. Also, you remember we're moving at a pretty rapid rate there. Number of rentals available now is 2,875, and that seems to be hovering around that figure. Certainly well down than it was 12 months ago by 52%, but certainly we're seeing a small trend up. But there still will be pressure to rent reviews coming into March because of the COVID restrictions that were there, and supply demand still is there, but what we haven't seen probably in the last couple of weeks has the inquiry being as ferocious as it has been, but it's definitely there. Obviously people are still coming back into West Australia, so there's still pressure as to finding accommodation. So it's been an interesting mix, but certainly something we would have forecasted back in February, March, that's for sure, but it is looking good. Now, locally, there's the Bunnings. Finally will be opening. We've heard more dates than you can whatever. But the latest date I've been told for the opening is the 7th of December. So hopefully which is next Monday. So that should hopefully be happening, and we'll see a flurry of activity over in Clayton Street. It's a massive building. I don't know if you've seen it. Well worth going. Everyone's going to go have a look because it's Bunnings. It's one of our busiest stores in the area. Now, getting back to our marketplace and probably just talking about other things that may influence our market going forward. This thing with China in the background has been quite a large discussion, and speaking to stockbrokers during the week, a lot of them are concerned for the mining industry in terms of that. The Chinese are making noise that they're starting to prefer South America over Australia. Now, I've got nothing to support this. I'm just going to go on what my thoughts are, and you may feel the same. Wasn't that long ago that China had tried a similar tactic, and I believe a lot of this politics is about supply and demand. So I believe that their supply is probably going to be on the increase, and they're looking to try and get prices down. I think they'll try and spook our economy. They'll try and spook particularly the mining industry. You think about South America, it's full at the moment, it's still full of COVID. Quality of the iron ore isn't the same, and the politics is all over the place. So I can't see the Chinese going towards that, but I think that will spook our market in the short term, and we probably will hear some negativity in our marketplace, but I still think that we're going to push through that. I still think 2021 is going to be a good one. We'll just watch the stock market over the next couple of months. But having said that, stock market's been at a very, very good level in the last few months, which is obviously creating capital for us, and therefore there's been flowing back into other bits and pieces. So overall, I think we're still going pretty well. I've just been over to Tasmania for and had a look over there. The tourism industry over there has been smashed to the nth degree. For those of you who've ever been down to Port Arthur, it's usually very busy. I'm talking to a tour guide who normally is booked up every day and taking 40 people a day. We were the only 2 people on the bus, and that was the first tour he'd taken in 2 weeks. So that'll give you an indication of how much growth still left in the Australian economy. I think tourism is going to be a big kick in, and certainly will be more money circulating in our economy over the next 12 months. So I think that we're going to a good place, and I think we're going to be fairly level. But time will tell. I'm not an economist. I'm just Milton from Midland, and just do the best that I can and give you my thoughts. All the best. Check out realestateplus.com.au.